Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza, and this is the brand new week and a brand new edition of Buy Now, Sell Now. And Cheryl, the festive cheer is definitely across the markets, and this particular week we're going to be getting the top recommendations by our experts as a Diwali pick for all our viewers. Exciting week up ahead.
Absolutely exciting week up ahead coming in for all of our viewers. We have like Dhamaka lineup, or rather the Dhamaka stock ideas coming in from a lot of our technical as well as fundamental guests all week long. But let's take a look at what the markets are doing, and markets are definitely on a firm footing in today's trading session as well. As you can see it on the screen, positive territory is what we are holding on to. No doubt we were a tad bit higher than the levels that we are trading at currently, but nevertheless holding on to strong gains coming in for Nifty above the 19,300 mark as well. Nifty Bank, however, is underperforming the benchmark indices a tad bit, is trading with gains of about 0.4%. Talking about the list of gainers and losers, only 5 stocks on the Nifty for now losing, and all of them are sub 1%. So it's SBI, that is the top loser on the Nifty, followed by Cipla, HUL, Tata Motors as well as Titan. That's the way how the setup is looking like when you talk about the Nifty. If you look at the advanced decline ratio, very much tilted in the favor of gainers. But like we said and like we mentioned earlier in the show, this week we have a power pack lineup coming in with regards to your stock recommendations or stocks that you can look at in this Diwali from Samvat to Samvat, that is. And we have our guest today. We have Kunal Bothra as well as Ashish Kapoor, who will be joining us very shortly. And very good morning to you, Kunal. And great to have you back after this long break that you've taken. I know you will say it was just 6 working days, but nevertheless, it's always good to have you back. And even a day of break by you feels very long. This is what all of our viewers have actually written to us. But talking about your top picks coming in for all of our viewers, and this time actually we've tried to add a differentiated view. We want 3 picks from each of our guests. So today we'll have 3 picks coming in from Kunal, which will be in 3 different brackets. One is safe sparklers, one will be high risk rockets, and value bombs. So Kunal, which are those?
Thank you so much for that, Cheryl. And this time I'll agree it was a long break, so not a short break, but I think a much needed one. Now in terms of the market setup, I'll start off with that. Looks very attractive, and I think it's a good time where long-term investors, medium-term investors, I think they should start positioning themselves in terms of quality stocks. Now the 3 criteria which you've mentioned, and I've picked up 1 stock from each of the criteria. So the first one, which is safe sparklers, I would probably call it as a stock or a set of stocks which are more or less large cap names and the more safer ones. Reliance Industries is something which looks very attractive in this category. I think the stock has gone through one of the sharpest phase of correction for itself, and I think at 2300 odd levels looks very attractive. I would probably expect the stock to actually come back to its previous highs of 2600, 2650 odd mark pretty soon. So I think that's a stock which I would probably put it into safe sparklers. In the other category which you mentioned, high risk rockets, I would probably term this as more of risky bets. And in that category, I think something which is popping up on the charts is RTN India, Ratna India. That's a stock which I think is trading at 58, 60 odd levels. Looks very attractive. The setup on the stock, the mild correction, the drag into the stock price trend looks very attractive. And I think at current levels, I would look out for a significant upside in the stock. Maybe a target of another 30 to 40% is what I would actually expect into the stock price over the next maybe 6 months or so. And the third category which you mentioned, which is value bomb, I would probably call it as a stock which is developing to or going into a second leg of a strong multi-year breakout. And L&T Finance, which has been one of the top stocks which I've been highlighting earlier, stands in that category. Looks very attractive. The stock has just recently made a fresh 52-week high coming out of a major 3-month, 4-month time correction. And I think that's a stock which I would be very bullish on.
All right, so those are the top bets coming in from Kunal. And remember, Kunal has been kind enough to agree to give us 3 new picks every day. So viewers, I hope you made the list or noted down the stocks that he's mentioned today. For the safe sparklers, his bet is on Reliance Industry. He has a target of about 2600 on that particular counter. High risk rocket, that is the risky bet. That's Ratan India. His target is about 90 rupees per share. While value bomb, that's a long-term valuable stock that should be in your portfolio. It is L&T L&T Housing Finance. That is rather L&T Finance. It is the target is 215. But let's talk about a stock that has listed on the bourses today and bumper listing of sorts coming in for Cello World. It listed with a premium of about 29%. We're now joined by Pradeep Rathod, who is the CMD, as well as Atul Parolia, who is the CFO at Cello World. A very good morning to both of you gentlemen, and firstly congratulations for that listing on the bourses. And Pradeep, let me actually kickstart this conversation with you. If you look at the revenue CAGR for FY21-23 is at around 30% or so. Do you expect this sort of a run rate or revenue growth rate to continue going ahead as well for Cello World?
So we are just wanting to perform as what we have performed in the last 3-4 years, and going forward our glassware unit which is coming in Rajasthan, which also will give an extra revenue to the company. So overall it looks really good to grow from here. Our product lines are also expanding, and I think so we'll grow at the pace what we were growing over the last 3-4 years.
Hello, gentlemen. This is Shrishti also joining in. Firstly, congratulations on a good set of listing. But Atul, coming to you, the houseware and the glassware segment is a high margin segment and accounts to 65% of your revenue. Will this be the main focus area going forward as well?
See, what we have planned to focus on all the three categories actually where we are. And apart from that, definitely consumer houseware will grow faster, even writing instrument will grow faster. So little bit, maybe 2-3% here and there will be the change actually, which you will find later on.
Right. Let's talk about the wide range of portfolio that you all are present in. You all are present in the houseware, glassware segment, writing instruments, furniture, as well as allied products as well. So if you could tell us about the demand trends that you are at least witnessing across your portfolio, across your businesses, how's the demand looking like right now?
No, the demand for the last 1 or 2 quarters were not that robust, but the companies performed well. And overall, I think so on this kind of products, the way India's economy is flourishing and the rural area demands are coming, in all the products what we are, I think so, I hope there will be a good demand over the next 3 to 5 years continuously. And that's what we are planning to, and upscale our production to meet the demand at the right time.
Okay, Atul, just wanted to know that how do you see your margin shaping up going ahead? What is the outlook on the RM cost, and what are the sustainable level of your margins? Because from FY23 to 21, we have seen around a 250 basis point cut coming in, but in Q1, there was indeed a recovery. So going ahead, any guidance on the sustainable levels of the margins we can expect?
See, raw material price at present is very soft actually, and we feel that at least in next 1 or 2 quarters it will remain so. And accordingly, since the raw material prices are in our favor, so definitely gross profit margin has improved actually accordingly.
All right, let's talk some more about your performance of the company. If you look at the ROC, it's much better than the peers. If you could tell us what exactly is contributing to that sort of an uptick, and as well as is this sustainable? Is the level of your ROC sustainable?
See, the major reason is actually our bottom line, which is you'll find that always it is a better and it's a very sound actually, and that has always given us an advantage to garner a ROC of around 44%. Even in future actually we find that it will be very good, and definitely it will be above the peers.
Okay, and lastly, Pradeep, if we see your exports, that has seen a mild downtick from FY23, that's seen a contribution of 7.8% versus FY22, 9.3% contribution coming in from exports. So going ahead, what is the outlook on the exports? Are you planning to expand more into new geographies, and how should we expect to see the contribution in your top line?
The export, I think so, is at the similar level of growth what we had last year, and I do not think it will shrink to anything, but it will grow because some of the segments we were not even exporting because we didn't have the capacity. So for us, definitely it looks on the growth side.
Okay, Pradeep and Atul, with this, we'll let you go on that. Thank you so much for joining us today on ET Now. Once again, congratulations on a good listing and looking forward for more. But with this, viewers, let's move on and let's get back to our experts and know their top recommendations coming in from Samvat this time. And with this, let me welcome on board Ashish Kapoor on the fundamental side. Hi, Ashish. Very good morning to you. What will be your top 3 picks coming in for Diwali? We have definitely got 3 different segments. So tell us what your stock picks are.
Yeah, thank you. Good morning. Thank you so much for having me over, and happy Diwali to all of you and all your viewers. Well, when it comes to the 3 categories which you have mentioned, I think when it comes to the safe sparkler, I would like to go with HDFC Bank. I think the stock has been lying low for quite some time, consolidating in a range which is very unlike what it has done over the last 25 odd years, where it has been a great capital creator. And I really think that once these problems related to the merger with the HDFC get behind us, HDFC Bank should resume its journey northwards. I think the bank is still the one of the best managed banks here, and also the one of the largest in the private sector space. Penetration is amazing. You go to any remote corner of India today, you along with SBI, you get HDFC Bank presence in terms of ATMs and branches. The systems have always been very above board, and I think that thing is just a matter of time. So I think it's a great opportunity for investors to accumulate in this low phase stock, which has performed very well and will, I have no doubt, will perform very well going forward. So it can be a great capital creator. But for 1 year, I have a target of 1,700 rupees, which itself is a very good return from the current levels. But I really think it should be held for a longer period of time to really realize the full potential which this company and this stock has. The second category, which is the high risk category, I think the public sector generally and public sector bank space in particular has seen a huge turnaround. I think given the credit growth and given the fact that they have a great space to grow, given that their balance sheets have got cleaned after many, many years, I think the scope is still not fully exploited. I think there is plenty of more upside in the very near future for these public sector banks. And if you're comfortable with the choppiness and some bit some nervous days which will happen on the way up, you could look at accumulating PNB. The stock has corrected somewhat from 80 odd, where it peaked a few weeks back. I think good time to accumulate. I personally think that the stock should reach 100 plus in about 6 months. So 100 is a target you can keep in mind, which itself is a very good return from here. And so, in kind of comfortable, the return is pretty high. So therefore, it kind of the risk with this is worth taking, because I think the risk is quite low. It's just the volatility which will kind of shake you a little bit. But if you're comfortable with that, kindly go ahead and buy. The third is the value pick, where I have IEX. I think the stock, again, due to the change in regulation, corrected very strongly a few months back. If you look at it, I mean, I think, yes, well, the regulation change did create a bit of a dent in its earnings and potential as a market maker in the power trading business. But I think the power trading business itself is going to grow very rapidly over the years. It has great potential. This company is still the market leader by a huge margin. So still has a commanding presence in a segment which is going to keep growing. Plus, they're adding other exchanges to it. They're looking at adding a few other products like commodities and other things which they're going to trade on their platforms. But otherwise, itself, the power trading platform itself is a very big advantage in a very big first mover advantage which they have, and a very good technology platform which they have created, which will help them really create good value going forward. So this is the third pick. Here you can keep a 3 years time frame and 250 rupees as a target, which is almost double from the current levels.
Right, so there you go. Those are the picks coming in from Ashish, the safe sparklers, the high risk rockets, as well as the value bombs. And like I said, viewers, every day we will try and get for you at least 6 picks coming in from our experts. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Viewers, remember this is the show where we get you answers for all of your stock related queries. Remember, you can connect to us live. We are available on that WhatsApp number that's flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested in the stock, mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. And talking about experts, we have Kunal, who's back after a break, as well as Ashish Kapoor, who's joining us on the fundamentals. A very good morning once again to both of you. And the first query that I have is coming in from Ghosh Dada. And Kunal, he's so glad that you're back from your leave. He thought that he's actually telling us that we should have informed the viewers that you were on leave. But yes, Ghosh Dada, we did inform that Kunal will be on leave for a week or so. And also Ashish, he's written a compliment for you as well. He said, thank you so much for your lovely Diwali pics. He's saying you're still looking handsome after so many years. And Kunal, you're a gem is what Ghosh Dada has mentioned. And the query that he has is about Quick Heal. He's saying he's holding about 1,000 shares at a price of 290 rupees per share. He wants to know what's the future of this particular counter. Do you track this one by any chance, Ashish? Quick Heal, no doubt it's much higher than his buy price, but on the future, what does it hold? What does it hold for Quick Heal?
Well, I quite like the stock. The company, I think they're doing quite well. And as a disclosure, I have invested some money in this some time back. I think the future looks good. It's obviously quite choppy being a mid cap, but I think the investor can hold on. I think the future looks quite bright.
Okay, so that's the take coming in on Quick Heal. But moving on and coming to you, Kunal, for the next query. This one is from Kathir from Bangalore, and he wants a view on Galaxy Surfactants, but needs a view for a long term. Currently, he's holding 50 shares at a price of 2,600 rupees. Can he add more given the fall if it permits and gives a opportunity? And 2,600 is what he bought at, but wants to continue this for the next 4 to 5 years.
See, I think it's a good stock. The history for the stock, even though over the last 3-4 years, has been that the stock has seen a 3x recovery from 1,000 levels to 3,500 rupees. And then from there, the stock has gone through a 1.5 odd year of time correction. Now, the good part about the chart is that the stock has come back towards a retracement of the 200 moving average. And it's going through a process of consolidation over here. So it could be a good time to try and buy into the stock. The only concern is the illiquid nature of the stock price. I think if I'm not wrong, the average volume for the stock is around 10,000 to 15,000 odd shares on the NSE over the last many months. So I think that could be the only catch, because having a high exposure to such kind of illiquid names could be a bit tricky in case if the market gets into any kind of a correction or the stock gets into a sharper corrective phase. So I think that's the only negative about the stock price. Other than that, I think it's an attractive chart. You can look to maybe buy or even hold your existing quantity.
All right, the next one is coming in from Vishal, and he's writing to us from Dubai. Ashish, he wants to know 4 to 5 good dividend-paying stocks that he can enter into right now for the longer term, and also he wants to know if they are at a right price right now. He wants to know if the risk-reward ratio is good to enter these counters. 4 to 5 is what he's asking, but I would request you to limit to at least 2 to 3 max.
Yeah, well, actually, there are two things in this. One is the markets have moved a bit, not the best of times to find great dividend yield stocks. But having said that, I think which ones could be good? I think Coal India, I think still looks very good. Has still, despite the move, has still looking very good at this value and has a great dividend yield on it. The other one is NMDC, which I think has a great potential and a great dividend yield both put together. Apart from that, I think when frankly one has to be a little careful. But if you are willing to take a bit of a chance, because the management has a history of not doing very well, but currently looks very nice. The way they are breaking the company, that is Vedanta. The way they are breaking the company into several parts. Historically, Vedanta also has been a very, very good dividend pay master. So this is one bet you could do the take. Other than that, I think the two short ones are the ones, the public sector companies which I mentioned, NMDC and Coal India.
Once again, coming to you for the next query. This one is from Devi from Hyderabad and holding 100 shares of Motherson Sumi Wirings at a price of 70 rupees. The company declared its results just last week. It was a decent set, but the stock is quite dead. It actually moves in quite a tight range, but looking at the results and the growth outlook, it is definitely a domestic play. Do you believe that it remains to be a part of the portfolio? Will you advise for him, for Devi? Should he continue to hold on or exit? Ashish, this query is for you.
Okay. So I think I quite like the company. I think the potential is huge. There's been huge concerns in the past regarding the way they have expanded and the way they have taken acquisitions world over. But the good part is that the consolidation process is quite on, and I think the management has been able to consolidate its presence across different products, different geographies, and that's very, very heartening. I think Motherson Sumi, if you have the patience and long time frame of holding, it can be a very good, very, very interesting capital building story from here. So certainly hold on.
On that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere.
Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And today onto the show we have Kunal Bothra as well as Ashish Kapoor with us to guide you better. And for the next query, Kunal, coming to you for this. This one is on UPL. Vara Prasad from Hyderabad is holding 150 shares of UPL from a price of 554 rupees. The stock has been quite volatile, especially after the results. And what to do in this particular name, because he's been holding this name for the past 2 years and now you can see almost at the cost. So good to hold at this point in time. And also want your advice on Nowv Fluorine. Can he go ahead and invest in this particular name at this point?
I remember, I think when we did a show on Dussehra, I think I mentioned UPL was a very tricky kind of a stock and very difficult to fathom the trends for the stock price, specifically when it goes down below its long-term averages. We've seen historically that the stock tends to underperform for a huge quantum of time. So it's not just the price correction, but it's the time which the stock takes to try and complete that corrective phase. I think that gets extended quite a lot for UPL. So it still remains a bit of a tricky stock. I would not recommend a buy at current levels. In fact, if you're holding, you can just continue to hold on. But I would suggest to add if and when the stock trades or crosses above the 200 moving average, which at current levels is around 650 odd mark. That could be the only point where we may sort of get a stronger confirmation that the trend on the downside has reversed and the stock could be starting off a strong uptrend. On your second part, Nowv Fluorine, I strongly believe that many of these chemical stocks like SRF, Atul, Nowv Fluorine, etc., I think these stocks have completed a major bottom formation for themselves. And we could be looking at a start of the entire specialty chemical sector doing pretty well for themselves. So I think in terms of risk reward, in terms of the positioning, it's a good zone to buy many of these names, including Nowv Fluorine.
Right, this one is coming from Venkatapati from Chennai, and he has Foseco India, which he's actually holding for over 20 years now, Ashish. He has 300 shares that he purchased at 220 rupees per share. I'm not sure if you track this one, but if you do you think that he should continue with this particular counter? Look at the returns that he's making. He invested in this counter at a price of 220. Right now, the stock is trading above 3,500.
Well, yes, I do track. I mean, I haven't, to be honest, tracked very recently, but over the years, I have been tracking this company. It's a fantastic company with a very great product line and a very good presence in the market on that product line. Very well managed. and has historically also been giving very good returns to the shareholders. They have been doing number of buybacks and other things also. So I think that's a very good. And 20 years you've been investing, you have got a great return. So I don't see any reason for you to change this. I think just invested, you're doing pretty well.
Okay, Kunal, coming to you for the next query that is on Apar Limited. A viewer named Jay Krishnan is looking to invest in this name with 90 shares of investment. Good time to invest in this particular name. He can continue holding it for the next 1 year.
Well, I think the stock seems to have done pretty well. It's trading above the 200 moving average since I think the last 1 year, if I'm not wrong, from 750, 1500. The stock had gone up to almost 6,000 levels. Now it's into a corrective phase. Ideally, for such kind of stocks, we typically expect that a 15% correction from the previous swing high starts off to be a good entry point. So from 6,000 levels, I think around 4,900, 5,000 levels is a good zone to start buying. So you can look to start buying at current levels and then keep on adding in case if there is any kind of another 300 to 400 point dip on a par.
Right, Kunal, a very short and simple question coming in from George. He's writing to us from Chennai, and the question that he's asking is there any chance for LIC shares to grow? If so, how much can it reach? Which level, like what level can it reach up to?
Is it LIC India?
LIC India.
I am not very bullish on the stock price. I think the most of the insurance stocks are actually getting into a drag. LIC India, of course, has been a drag. I would suggest to buy the stock only if it crosses and whenever it crosses above that 700 mark.
Okay, Ashish, the next query is coming from Poonam from Punjab, holding 40 shares of TCI Express from a price of 1,425 rupees. What's the outlook on this particular name? Continue to stay invested?
To be honest, I haven't tracked it lately, so I can't comment on it.
Okay, Kunal, anything on the charts that you can help her with?
Well, TCI Express, again, I think is a stock which has been an underperformer. I would not suggest a buy at current levels. If you're holding, I would suggest maybe keep a stop loss of 12, 20, 25 on the stock price. But I think on the upside, if you're looking to add, I would suggest an add only about the 1500 mark. That could be a strong breakout point for TCI Express.
All right, Kunal, another one coming for you. This one is from Raju. He's purchased IRCTC at a price of 734 and Laurus Labs at a price of 502. Which one should he continue to stay put with, and which one should he look to exit?
See, I think IRCTC, of course, has been an underperformer in the last 1 or 2 years. But then when you look at this in the comparison from 2020 lows, the stock has done exceptionally well. I am bullish on the railway stocks from a long-term play. So I think if you're looking at it as an immediate rally, you may not probably expect a major breakout coming into IRCTC. So patience could be tested over here. If you have a time frame of 2 years plus, then it makes sense to add the stock at current levels. Laurus Lab also, I think many of the pathology stocks in the last many days, I think have started to show signs of a breakout. Laurus Labs has underperformed its other peers like Lalpath Labs, etc. But I think at current levels of 370 approximately, it could be a good zone to buy the stock, especially if you're looking to buy this on dips.
Okay, Ashish, the next query is coming from Ajay from Delhi, holding 3 shares in his portfolio. I will take it. The first one is BEML, where he is holding 40 shares near to the current market price of 1963. But as a good, sitting at a good profits in stocks like HAL and BEL. HAL, he entered around 1200 odd levels and BEL around 110 odd levels. So should he stay invested for the next 2 to 3 years as well? What is the outlook going ahead, or would you advise to book profits in any of these names?
Well, I think one of the things which is really happening and in a very positive way in India is the defense infrastructure and the defense production, which is significantly and visibly going up. So I think both BEL and HAL have a great presence in this upcoming industry, and I don't see any reason. When you've been lucky enough to buy these stocks at a good rate some time back, I don't see any reason why you should be in a rush to book out. And similar views for BEML. I think the company is doing very well. All the 3 companies are very well managed and very well managed public sector undertaking. So they're a very rare category where, despite being in the public sector, they are very well managed. They have given good returns to shareholders, and the industry outlook and the company outlook are very encouraging. So I think just stay invested.
All right. This next one is actually coming for you, Ashish. This one is coming from Tushar. He's writing to us from Delhi, and he's asking, and he's saying that given the high potential of renewable energy in the future, can he look to buy Inox Green Energy, or even for the matter of fact, Inox Wind at current levels? He's saying both of these counters have shown a good turnaround, and if not these counters, then which one would you suggest for him to go ahead and play the renewable energy theme?
Well, I think, frankly speaking, renewable energy, great theme, yes, but almost every stock which you can think of has either moved up a lot, or there are questions on the model itself. So it's a very evolving kind of a space where you really can't bet on what will happen in a few years from now. So very difficult to buy a stock or give a stock recommendation on that. I mean, there have been, of course, many turnaround stories, including Suzlon, which is itself, I think, a turnaround story, but difficult for me to recommend anyone. I think either all of them, including the names which you are mentioning, are either they have moved up a lot, or I'm not very certain about their model or their future financial predictions and how to really predict what is going to happen in these with various industries, including wind, solar, and other parts of the renewable energy space. So yes, it looks very encouraging, but I think the best is to try and hold on right now and watch the space, and then maybe come out with winners after some time. Right now, it's very evolving, and most of the companies are in a state where the investment recommendation is not for me possible.
Wait for some more time to catch up that renewable energy theme. But Kunal, the next query that is coming is on oil and gas space. This one is from Amit from Mumbai, and he wants to know good time to enter IOC at current levels for the next 1 to 2 years. What will be your suggestion?
Well, the last, I think, 10 odd days, the stock has run up 15 odd percent, I think from 85, 86 levels to now 100 plus, where the stock hit an intraday high. So the last couple of weeks have been quite steep. That could probably be an indication that maybe the stock is getting overbought. So it's always better to buy this stock, and this set of stock on a corrective phase. We've seen historically that many of these oil and gas stocks, they tend to have those sharp phases of correction. And where the stock retraces by 10% to 20% kind of a margin from the previous highs. So I think I would suggest to try and take advantage at that point of time for stocks like IOC. So not to buy at current levels, wait out for a correction.
Right. The next query that I have is coming in from Sandeep, and Sandeep wants to know about Dr. Reddy's and Infosys. Ashish, what he's saying is that he's holding both of these counters in his portfolio, but he's suffering a loss of approximately 5% with these counters in his portfolio. Now he wants to hold them for the next 2 to 3 years, wants to know what's the prospect. Do you think that this short-term blip is nothing to worry about? 2 to 3 years down the line, Dr. Reddy's, Infosys are good companies in their respective sectors? Or are you advising to switch out of these counters?
Well, if 2 to 3 years is your time frame, then I don't see any problem, because pharma itself as a sector is coming back. So the weight could be less here. And I think Dr. Reddy's has already come up quite well from the lower levels. And I think I don't see any reason why it will not continue, and investors should not make money in the near future also. Regarding Infosys, yes, 2 to 3 years is a good time frame. The industry is going through a very tough patch. There are a lot of headwinds. The global markets are under a recessionary, phase. So it will take time for them to resolve their issues. And meanwhile, I think the companies have their own challenges in terms of attrition rates and the costs going up. So it's going through a rough patch, but I'm sure the industry will come back. I mean, I think the future of outsourcing is definitely alive, and the more technology the world focuses on, the more backward, the more let's say the background work they'll have to do, and a lot of it continues to get outsourced to India and these companies. And Infosys being kind of a market leader in this space, or at least along with few other majors, the market leader in this space. So I see what I think is that if you have 3 years, then I think even Infosys is a very good stock to hold on to, but you will have to have more patience than Dr. Reddy.
That's the take coming in on Infosys. But with this, viewers, it's once again time to slip into a very short break in this edition of Buy Now, Sell Now. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of our stock-related queries then. And this next one that I have is coming in from Siddharth, writing to us from Bangalore. And Kunal is saying he's a huge fan of yours. He wants a technical review on CDSL 3 months time frame. It's given an explosive move post his earnings. And also he wants to know about Prestige. Stays 3 to 6 months view. He's holding both from lower levels for the short term.
So I'll start off with Prestige because the real estate pack is actually something which is looking quite charged up. But I would also believe that this may not just be a short-lived recovery or a rally for the real estate names. I strongly believe that this could be a major multi-year rally for many of the real estate stocks. So I think Prestige could be one of the stock which you can have in your portfolio. But I would also recommend to try and diversify if possible. If you have that capacity to try and add maybe stocks like Godrej Properties, DLF, and if you're looking at slight high beta mid cap names and even Antaraj Industries on dips or at current levels. Coming to the first stock, CDSL, again, I think the CDSL generally tends to move when the market gets into a risk-on phase. I think CDSL, BEC over the last few weeks have been doing exceptionally well for themselves. Again, it's a fact that if you have a time frame of 3-6 months, it may not be great in terms of getting the best returns from these kind of spaces. You have to have a time frame of at least 2 years or more for these stocks to get into that strong uptrend. And in that process of 2 years, you will get those phases of correction of 5-10% where you can keep on adding on further. So that should be a strategy for CDSL.
Okay, Kunal, since you were just touching upon the real estate space and Prathamesh wants an answer specifically from you, good time to enter Indiabull Real Estate at current market price. He wants to stay invested for the next 6 months.
See, it's a high beta stock. The sector itself is, of course, high beta. Now, why bet on a extremely high beta stock where you may expect the stock to get into recovery? Let it show signs of strength. Even if you are late by a few percentage points, it's absolutely fine. So it always makes sense to go with the proven performers. And I think I would probably stick my neck out and say that maybe at current levels also, something like DLF, Godrej Properties, Anantraj Industries are something which looks fairly attractive. So first fill up that basket, and then if you have additional capital, then go out for Indiabulls Real Estate.
All right, this next one is coming in from Vinod and he wants to know about Natco Pharma. Ashish, for a period of 3 to 5 years, how does Natco Pharma look to you? I'm not sure if he's already invested in the counter. If he's invested, what strategy should he adopt? And if he's not invested, then do you think now is the right time to go ahead and dip your toes in Natco Pharma?
But I think with a 3 to 5 year time frame, I think certainly you can buy. I think the stock has a great history of creating investor wealth, has gone through some kind of a consolidation phase. So I think it ticks all the boxes. I think go ahead. If 3 to 5 years is a time frame which you can hold on to it, I think Natco, whether you're holding or not, you can hold on to it or buy fresh. Either way, it's looking quite good.
Okay, but with this, viewers, let's move on and let's start taking all your queries in the rapid fire session. And Kunal, the first one is coming from Indu. Wants to know good time to invest in stocks like PFC and RAC or wait for some more dip?
Wait for a correction, at least a sizable 5-7% correction could be a good starting point.
Another one, Kunal, your way. This is from Mali. JBM Auto, Electra Green Tech, right time to buy right now at this price for a period of 1 year?
Maybe start at current levels, but then wait out for another 10% correction. I think that could be possible for these stocks to add further.
Okay, Ashish, Joseph is holding 1,000 shares of Trident at a rate of close to 33 rupees. Wants to know the prospects going ahead for this one.
Well, as long as you're comfortable with some choppiness, continue to hold on.
All right, this one is for Max Estates, Kunal. I'm not sure if you can tell us about this. 200 shares of 220. Anupam wants to know target for next 1 year.
Apologies, don't track it.
Okay, Kunal, any advice on Vatek Vabag? The viewer name is Venkatramani from Bangalore and wants to know, is this the right time to enter this one?
Excellent chart, excellent stock. I've been tracking this since the 350 levels for Vatek Vabag. Looks very attractive. You can consider buy at current levels.
All right, Kunal, Ramamurthy from Bahrain is making 30% profit in Godrej Properties. Time to book partial profits?
If you're a long-term investor, I think you should continue to hold on.
Okay, Ashish, the next query is on DCW. NSS Lakshmi has been holding 2,000 shares from a price close to 16 odd rupees. Good time to book out profits or continue to hold on?
Book partial profits.
All right, this is Dr. Subaya who has 3 queries, but I'll take just one of them. Cummins 150 at a price of 1,950 rupees per share. Kunal, what should he do with this particular counter?
If possible, add at current levels.
Okay, Ashish, any advice on Reddington? The viewer is from Kochi. Marcos Kurian is holding 1100 shares from a price of 154 rupees. Should he continue to hold on or move out of this one?
We need to hold on. For whatever reason, it's been a slow mover, but I think it has a great potential.
Kunal, lastly, one of our viewers bought NIIT at a price of 141 rupees per share. What sort of a target can he look at?
Short term wise, you may look out for 175, 177 as a target.
Okay, but with this, viewers, that was the last query in the Buy Now Sell Now edition. Thank you so much, Kunal and Ashish, for joining us today and helping all our viewers with their stock-related queries. But with this, viewers, it's time to say goodbye from me and Cheryl and the entire team who put the show together. Thank you so much for watching. Don't go anywhere. Markets at noon. Catching up next.